In accounts, everything begins with a transaction. Hence, it is one of the basic and important concept in accounts for beginners. If you understand what is considered as a transaction in accounts, then your small confusion about what to record and what not to record will be solved. In this video we are going to explain how to identify whether any event or activity taking place in the business is a transaction or not. To begin with, in any business, there are various events or activities taking place, both within the business itself, as well as between the business and outside persons. Now, out of all these events or activities, we have to find out which events or activities are supposed to be recorded in the business books of accounts. The answer is simple. Only the transactions taking place in the business are to be recorded in the business books of accounts. Now that we know this, the next question that arises is, what do you mean by transactions? To understand this, we will see few points that will guide us to understand whether an event or activity is a transaction or not. Firstly, point number 1, a transaction is an external event. External means between the business and some other person. Also, not only should it be an external event, but it should also be able to be expressed in terms of money. Second point, this external event should bring change in the financial position of the business. If any event or activity satisfies these 2 points, then we can say that it is a transaction. Now that we have understood what a transaction is, let us see some features of transaction. Number 1, transaction involves transfer of something that has value between two or more entities. Number 2, transfer can be a reciprocal transfer. Reciprocal means exchange in which both the parties receives, as well as sacrifices something in value. Number 3, transfer can also be non-reciprocal transfer. Non-reciprocal means transfer in which a business unit receives or transfers something without directly receiving or giving a value in exchange. Some examples of non-reciprocal transfers are: Number 1, incurring a liability, that is, penalty imposed by local authority. Number 2, cancellation of a liability, that is, provision for workmen's compensation. Number 3, receives an asset, that is, subsidy received from government. Number 4, transfers an asset, that is, payment of income tax. To summarize, there should be an external event, which can be expressed in terms of money, and which brings a change in the financial position of a business. Hope you found this explanation interesting. If you like it, do like the video, and subscribe our channel. The channel name is Commerce Studio, Nikhil Mundlik. Thank you.